Here we are on the pound yen 5 minute time frame, and we have a trade I've just entered in live, and this is a rising channel. It's a little bit different to the standard types of rising channels I take, because we kind of have a channel within a channel, but nevertheless it meets all the requirements. We have touched a minimum of 2 times either side. We've got the RSI confirmation, we've got it coming into an even handled number, we've had a lower close, and it's coming to structure as well. So what I'd like to do as usual is simply do our higher time frame analysis. Now, because this is on the 5 minute, the higher time frame won't really have that much influence on what the 5 minute is doing. Nevertheless, it is something that we must do. So what I am going to do is go out to the daily time frame right now and have a look at this. So here we are, and if I put a structure level in here, you can see that last week on Friday we had a big bearish candle after it came up and tested the 149 flat and this higher structure level, and we've moved lower. If I was just to put a fib on here, you can see that we have not come down to 382, and just based on the current setup, I would say that this pullback here is limited before we see a continuation to the downside, just based on the candlestick formations. That is all. So let's go down to the 240 time frame, and what we have here is, you can see that we've got several 4-hourly candles that came down and actually closed below this structure level right here, giving us a potential rotation. We're no longer bullish, we're looking at potential rotation, as this is now a violation. Let's go down to the 60 minute time frame. Price at the moment is at the 148 flat, and we haven't gone overbought as yet, but what we do have here, we had this quite nice move lower, and then we've had 3 tests of this structure level here. So you can class this as a double or triple bottom. It wasn't one I could trade because we had only just broken the structure level, and from there what we've done is we've seen a move higher, and again we've come into that 148 flat. So if we drop down to the 15 minute time frame, pretty much the same story. Let's go down to the 5 minute, and you can see, I'll actually show you that we have a channel within a channel here, and why I sold at this area. Okay, so let's remove these VS1 levels. So what we have is, let me delete this information off. I'm going to put in a structure level here. And you can see we have the structure level right here, and that comes in at the 148 flat. And if we zoom in, we can see that we have quite a nice pole coming up to this level, and then that pole has been respected along the top. We can see that we have an internal pole here. Sorry, not an internal pole, an internal rising channel that's here. And then we've actually got another channel which is just it's going to be there. Need to position this correctly. Yeah, okay, we can have that there. So you can actually see then that we've tested here, then we've tested multiple times at the top, and then we've done our second test on the bottom right here. And then what happened is, when we hit the 148 flat, we had this lower low, lower close. So we have this internal rising channel structure line here, and we've already broken out of that to the downside and come back up to retest this stop. And then the bigger channel here, where we've tested now twice on the bottom, which is a minimum requirement for any type of channel, rising or falling or flag pattern, it needs to be a minimum of 2 times. And so what we have now is we've got this coming into a even handled number, the 148 psychological number. we've got structure looking left. We have the RSI confirmation, so we went overbought at the start of the poll at around 85, 86. We do have that divergence, which is a requirement for these rising channels, and we would be looking for targets at this level. I do believe actually we can come a little lower, but nevertheless the start of the poll would be targets on this type of pattern. So if I bring the orders back on, this is how it looks, and I've only gone 10 pips above that even handled number because I'm looking at the psychological number holding that zone. And if we look here, we can see we clearly just bounced off that 148 flat there. If we look here, we've got exactly the same thing here. And so I don't want my stop above this level, which is where you could say it's the safest spot to have it. I'm simply looking at that 148 even handled number as the main structure level and as this holding, because if we know anything about even handled numbers, they can act very much like structure. So in this scenario, this is quite a low risk trade in terms of the amount of pips that I'm risking. So this would be the risk. The reward on this trade is going to be like this. I do believe we can come lower, but as I say, targets usually on this type of channel is at the top of the pole, and that's what I'm going to be going for in this instance. And we're going to make that one green. Okay, so in terms of risk, we're looking at 14 pips, and in terms of the reward here, we're looking at 31. So just over a 2-to-1 there. We'll come back and see whether or not we can, after this lower close now, maybe break out of this channel and make our way down to those potential targets. And we're back on the pound yen, and unfortunately we were stopped out for 14 pips on that first attempt. So what I've done now is I've waited for the market to go higher and go up for its next test up at this zone. And now this time we're actually a lot closer to the top of this structure level I was talking about. And so what I've done here, if we zoom in, you can see that we've had a couple of indecision candles. Again, this is only the 5-minute time frame, but coming up here now for this test and a couple of indecision candles near the top of this structure zone as well, I've been able to get involved. This time stops are up here past this structure level, and so targets are in the same place that they were before. It just means that this time we are risking 19 pips, so we're having a second shot at this, and the reward is 50. So 2.5 to 1, something like that on this particular trade. Again, we do have our stop now above that structure level, so if we do breach that level, I'm assuming that we're going to be wrong here. So we'll come back and see what happens with this trade. So a little update on this trade. We did rally up and retest the highs here again, and now we're seeing a break to the downside. I think this will be my last chance at this trade going on to win, simply because if we hold this structure line and come back again, unless we double top up here, which is always a possibility, this is probably going to be a losing trade if we do get up there again. Right now it does look as though we're having a bit of a break out. Of course, you never know, particularly with a 5-minute trade, this could suck all the way back. We'll come back and see what happens with it. And we're back for the final part of the video, and as you can see, we have rallied down and hit our targets for 50 pips. So I am very, very pleased at that. A little bit oh, there's the text message just to say that we were close to targets. I was actually in the gym, and then I had to go for a quick shower, and I've just come back to my phone, and the text message has just come through there to say that we're close to target. So I couldn't catch it hitting the targets, which is what I love to do, just so I can really give an all-round experience of this trade, from entering and underwriting through to the halfway towards targets, and then just as we approach targets. It just, for me, completes the overall experience. Of course, it's not that important that we don't capture it, but it's just what I like to do on the videos. So I like to take something away from pretty much every video. It isn't always possible sometimes with trading, but in this video, or this particular trade setup, I think what I would like to take away from it is the fact that I had an opportunity to enter in early on this trade, and I got the signals, I got the confirmation, but I didn't put my stop above that structure level, and I was fully aware of that, and I was prepared to re-enter in the trade, as I did do. But I actually knew that if I was to get stopped out, it's very likely that we'd see a move up higher, rather than for the second move, rather than risk too much on the first move. Okay, so let me clarify that. I risked 14 pips on the first move. If I had have had my stop up here where I did on the second move, I would have maybe risked 40 pips. And because of this structure level, I knew that it was likely, should I say, that we were going to come up to the top of the structure level. And if you look where the structure level is, we actually came up and tested it and instantly reversed from it. So in trading the way that I did, it allowed me to get involved twice without risking more pips than was required. So what I take away from this is I don't like to chase the trade. You won't see me entering in a trade 3 times, because for me personally that's chasing the trade. But I'll enter in once conservatively with a small stop loss. If I get a very good entry signal, and if it gets blown out the water, well, then I'll wait for another one at the higher structure level, as I have done here. So I lost 14 pips first of all. We banked 50 here, so that's 36 pips in total this trade has made. Very good trade, and do me a favor, if you do like it, go ahead and subscribe if you haven't, and go ahead and give it a like.